Hi, it's Carlo. Welcome back to CMC Markets Trend Tracker with a special update on oil. I'll be covering what's been happening right now with oil prices and implications for traders going forward. I'll also be looking at some charts on West Texas crude and Brent crude to assess current trends and levels to keep in mind. First, it's important to note that recent price movements in oil has been affected by tensions in the Middle East. Now, it's important to clarify also that neither Israel nor Palestine are oil-producing nations. So therefore, the near-term risk for oil supply has been limited. And that's why we've seen a drop of just over 1% the last 24 hours in oil prices as Israel regained control of the Gaza-Israeli border. The second thing to note is that the situation could change very quickly, especially if it involves other nearby nations such as Iran. Now, there have been accusations recently, some towards Iran, and Iran has denied any involvement in the Middle East tensions. And as you know, if Iran was involved, being a significant oil-producing nation, it would have a much larger impact on oil prices. The third key issue for oil is that this conflict comes at a critical juncture for the US, who are seeking to negotiate a defence pact between Saudi Arabia and Israel. Now, as you can imagine, if this conflict continues for quite some time and worsens, it's unlikely that Saudi Arabia is going to agree to any kind of defence pact. In fact, political analysts have suggested that this kind of deal might be off the table. In addition to that, the US has been turning a blind eye to some of the sanctions against Iran as the US tries to secure oil production, given most recent cuts by nations such as Saudi Arabia and Russia. Now, if this situation worsens and Iran was in fact involved, then the United States may need to reassess its position on that, and therefore it's very difficult to assess the medium-term impacts on oil prices. Now, bringing all this together, some implications for traders. 24 hours can be a long time in financial markets, and this situation is very dynamic, so we need to be on top of what's going on at all times. Traders need to grapple with whether to focus on global economic growth, higher interest rates, and the resilience of the US economy, or do we as traders focus on the potential escalation of the Middle East crisis and therefore its impact on oil and other assets? And lastly, uncertainty may persist for quite some time. If that's the case, oil is quite sensitive to a worsening situation in the Middle East. And traders need to keep an eye on oil price movements, but also some safe haven assets such as the US dollar, gold, US Treasury prices, German wood prices, and Japanese government bonds. Turning now to the charts, firstly we have West Texas crude oil. On the daily chart, we can see it's been an uptrend channel since July this year. And a lot of that has been on the fact that Russia and Saudi Arabia announced production cuts for the remainder of 2023. We did see quite a vicious 10% drop in WTI prices last week, and that was on concerns of higher interest rates in the United States and globally, and what the impact of high interest rates will do on economic growth and therefore negatively impact on the demand for oil. So that sharp drop there, as you can see on my chart there, pull back almost all the way to the 50% Fibonacci retracement level, just above $81 a barrel, and they bounced off quite aggressively. Obviously, we've got the Middle East tensions right now, but the balance was there. The charts picked that turning point. So keep an eye on that 50% Fibonacci retracement level going forward. Prices are now resuming the uptrend, and levels to watch from here. Support is around that $81 barrel mark, which is 50% Fibonacci retracement level. And then below that, you might look at the 61.8% retracement at $77.70. Top side level is back to recent highs, $95.50 a barrel. The Brent crude oil chart looks almost identical to West Texas crude, apart from the levels, as the levels are different. You know, you've got prices pull back last week exactly to that 50% Fibonacci retracement level of $84.15 a barrel in Brent. And so That's most likely going to be a key support level going forward. Below that, $81.25, which is a 61.8% Fibonacci retracement level, and topside level, recent highs, $96.45 a barrel. That concludes my analysis on oil for today. I look forward to seeing you in the next video.